This is Wallet Brief, where we break down what actually moved the U.S. economy this week, without the noise. If prices, interest rates, jobs, housing, or taxes are quietly changing your money, this is where you stay informed. Let's get into what really happened this week and what it means for your wallet. Over the past year, the U.S. housing market has faced significant headwinds. Rising mortgage rates, coupled with persistent price pressures in many regions, have kept affordability challenges high. While demand remains strong in some areas, overall home sales have slowed compared with the surge seen in previous years. In prior months, trends showed a split. Urban and coastal markets experienced modest price declines, while suburban and smaller city markets continued to see steady demand. Inventory levels have been slowly adjusting, but the overall market remains constrained. This week, the latest housing data revealed mixed signals. Existing home sales showed a slight decline, while new construction activity in some regions picked up. Median home prices remained relatively stable overall, reflecting the balance between continued buyer demand and the limitations imposed by higher borrowing costs. Looking at the trend, it's clear that the market is entering a phase of normalization rather than rapid growth or collapse. Higher mortgage rates continue to limit affordability for many first-time buyers, while sellers face a more competitive environment as buyers become selective. For households, the practical impact is noticeable. Monthly mortgage payments remain higher than the lows of recent years, which can affect household budgets and decisions around buying or refinancing. Renters may also feel indirect pressure as potential homebuyers remain priced out, keeping rental demand elevated. The broader trend suggests that while the housing market is not overheating, it is also not collapsing. The balance between supply, demand, and financing costs will determine the pace of price movements in the coming months. Looking ahead to next week, key indicators to watch include mortgage rate movements, pending home sales reports, and regional price updates. These signals will help determine whether affordability pressures ease or remain a significant factor for buyers and renters alike. That's your wallet brief for this week. These changes don't always make headlines, but they do change how much you pay, save, and earn. We'll be back next week with the updates that matter. Until then, stay informed and protect your wallet.